Whenever we buy or sell goods, the transaction takes place in two ways, either cash transaction or borrowing. If I have sold goods on loan, then I have booked the income on the credit side of my P&L account in the sales. And if I had sold on loan, then my account stands on the asset side. Now, a concept of that there comes, debtor agent, i.e., how old is my invoice? There are some debtors of 30 days, 60 days, 90 days or more than 90 days who run our carry forward to 1 year to 2 years today. But later it is ultimately found out that now this director will not give money to our business. I sold the goods to him. Now he won't give me any money at all. So this became a loss for a business. Then this became our nominal account and I booked it on the debit side of P&L account. So bad debt, in those who were going to be my director have now gone bad. Now they won't find me. So I booked my losses. Now maybe the same director will pay me again after a year or two. If he does, I will hit his reverse entry. If I am booking expenses, then my assets are being reduced here. Then I have given credit to the director and my loss is being booked. If my expenses are increasing, I will do it. Now let's talk about direct stop. The goods I have purchased are kept in my godown. Now a fire breaks out there and due to which some of my routes are destroyed. Now my insured goods are slightly different and the uninsured goods were also different. I will pay as much as the insurance company has to pay me. Debt, i.e., I will get such a claim, loss by fire. This has been my expense. I will debit it. It will come in the debit side of my P&L account. This purchase is now mine because these goods have not been sold. It has not been sold. It will be lost from my purchase as much as the claim to be received is receivable. That is, the insurance company will now give me this much claim amount. It will come to the debit side of my asset side and the loss by fire is my expense. Now what I had purchased, I had to spend some advertising to grow the business. Some samples I had to distribute. That is, I am not selling what was purchased. I am distributing it for free. Now when I am distributing for free, when my sale is not done, it will not come in my income. But what is my expense will become my book. Booked expenses in sample distribution. But the purchase will be lackluster. What I had purchased above became less and the advertising expenses increased, I debited it. Now what the business owner does sometimes is withdraw cash from the business for his personal expenses. If he withdraws cash, cash is my asset, I gave him credit. Sometimes instead of cash, he carries some stuff in kind. For example, if the goods that we bought to sell in the business are taken home for our personal use, then I will credit my purchase account there. That is, I will now reverse the expenses that were booked. Drawing is my personal account. I have debited it, which ultimately reduces my capital.